by checking and banking. Every single person is going to use this sometime in their lifetime. So let's go ahead and get started with just a few checking account basics. So a checking account is a written order where I pay a person or a business who is the payee, P-A-Y-E-E, payee. And it's considered a demand deposit because as soon as that payee shows up at their bank to cash it, I have to be able to cover it on demand. So then the process for how this works you need to understand. So the payee cashes your check, and they may do that by doing their phone app, or they may show up at the bank and fill out a deposit slip and cash it. Their bank, the payee's bank, then returns that check to your bank. Your bank takes the money out of your checking account and sends it to the payee's bank. And then your bank will stamp the back of the check indicating that it's cleared, and that's a canceled check. So that's their way of showing that they've paid it. Most banks no longer do that because they just transmit an image of the check or a substitute. It's just like the original, so that you can, as your bank can, still cancel that thing. So that's the way it typically works now. Another thing that matters is that you have to have enough money in your account in order to cover the check when the payee brings it. If you don't, it's considered an overdraft or an NSF, non-sufficient funds, or it's bounced. You've probably heard that term before most often. If you write a check and don't have enough funds and it bounces, your bank is probably going to charge you a fee for having had to process it and communicate with that other bank that you did not have the money in the account. Floating a check is another thing. The key here is this is illegal in most states, and what that is I write a check and I don't have enough money in my account when I write it, but I hope to deposit money to cover it before the check actually clears and comes back from the payee. So I'm not supposed to do that because I should already have enough money in the account when I wrote it. The advantages of a checking account, I think, are pretty obvious. It's very convenient because you have all the checks with you. It's very safe, way better than having cash, because if you lose cash, there's no way to claim it was really yours. There's built-in record keeping with this checkbook register that we'll talk about here shortly, and then access to lots of other bank services as well. So in order to open a checking account, flip, if you would, to page 106 and take a look at that signature form. That signature form is what you fill out with all your information in order for the bank to know whose signature on a check is legally binding so that they should pay it. So that signature that you use on that form is the one you should always use whenever you write a check. And then the bank's going to require that you have an initial deposit. So I put $50 or to $100 in it so that I can start writing checks against it. These are the two crucial steps. You're going to watch a video as well that I think talks about maybe 6 steps, which are fine, but these two have to happen or you can't get the credit or the checking account going. So then the parts of the check. So there are quite a few different parts, and I'm just going to go through each one of them here, and I'm going to do it because of the way this is working, kind of in backwards order here. So there's memo. That's what the check is for. So this one was written for groceries. Then there's an account and routing number. That routing number is what helps a bank find your bank. So this part right here is the routing number. This is your account at that particular bank. And this routing number, very similar to the numbers up here. So you need to know what these are. It is the American Banking Association number. And the top number up there is the location and district of the bank. The bottom number is the specific area of the actual bank. Pearson's playing with his toy, so you might hear him. Then you sign it. Again, that signature needs to be the same as what's on your signature card. You put the written amount of your check. So I write it out in words with the words "and" in there, and this is the cents, so 12 cents. And then I do the squiggly line over to the dollars because I don't want someone adding words in here. Know that if this written amount is different than the dollar amount that you have up here, sorry, I'm laughing at him because he's playing with that toy. But if these are different, the written numerals and the words win. So they would always do that. So here's the numeric amount. Try to put it over as close to this dollar sign as you can so that people can't add, a 5 in front of here and then add 500 here and cash a check for more. And then you put the payee, which is the person who receives the check, and then the date on the check. The other thing I would note about this date is you are not allowed, it's illegal to post-date checks. So if today is April the 14th, I should not write the check for April the 20th, hoping that I can then buy a couple days before they cash it at the bank. That's illegal, so it needs to be the date that you're actually writing the check. So when using your checking account, when you're writing checks, you should always write with pen. It needs to be legible. You have to sign it. That makes it legally binding. And then you have to have funds in it so that you don't overdraft. If you screw up writing the check, which will happen a lot, all you want to do is write void across the check and keep that as documentation so people don't think you used a check to commit fraud. The second thing when using is paying bills online. So you can pay them online. You can do one of two things. You can pay the vendor directly, so the telephone company, I can just get on their website and pay by giving them my routing number and account number, or I can have my bank send them a check to do payment. So either of those is considered paying bills online. Making deposits. So when I make a deposit, if you look at page 109 in your book again, there's a deposit slip. I have to fill that out, or I use my phone, which also will fill out something similar where it says what currency, cold hard cash and coins, and checks that I am depositing, and I total it up. The last thing when using your checking account is using a checkbook register, and you are going to have to do an activity on this, so you want to make sure that you can follow this on page 110. So what is a checkbook register? It's where we record all of our account transactions. So when we do that, we would add deposits. I would add any interest I earn on this checking account if I do. And then I would subtract any checks or withdrawals or other fees on the account. And if you look at page 110, it shows you how to do that, the different checks, deposit, withdrawals. The key for me is that the description or the transaction actually is 2 lines. So if you consider, like for instance, on rent on check 582, it went to Bellevue Apartments on July 20th. It was $600, and I have to pay a 20-cent fee for every check I write. So the amount on that line was 620 cents. And then the second line of that transaction says it was for rent, and now the new balance is $363.98, which we just get by taking the 964.18 minus 600.2 to get 363.98. So I do a running total. Each transaction is usually 2 lines, and that's how I fill out a check register. Then when I am reconciling my account, this is really a crucial step. So a bank reconciliation is just trying to make sure that what the bank statement thinks you have in the account is the same thing that you think you have in your account, which you recorded in the checkbook or the checkbook register. So I'm trying to match those two amounts. So it's probably easier if you look in your book at this, but let's just kind of talk through each of these pieces. So first, write the ending balance from the bank statement. So if you're looking at page 111, you will see about a third of the way down it says ending balance $926.68. That's how I get line number 1 here. Line number 2 says add credits or deposits that aren't on the statement. So what I want to do is on that statement on page 111, I'm going to go through and for checks, debits and withdrawals, and deposits, anytime that I have it on the bank statement, I'm going to go over to my checkbook register on 110, and you see where I'm going to make check marks. There's a column for check marks. So check 581, I would put a check mark next to that, and then the ATM withdrawal of $20, I'd put a check mark next to that, and then the $32.50 online bill payment, I'd put a check mark, and I would go through everything on the bank statement and do that. So if I had any deposits on my checkbook register that I didn't have on the bank statement, I would put it here, but I don't in this instance. Then I would add these two lines together, add them, and then I'm going to list any check or withdrawal or other thing that didn't have a check mark in the register. So the only things that didn't is check number 582. It was never on the bank statement, and my service charge of 20 cents for writing that check was not. So I would put that there. And then I would total them. I'd get 600.20. And then last, I would subtract line 5 from line 3. So take 926.68 minus 600.2, and I would get 326. This should match what I have in my checkbook. And if you look at the register on page 110, at the bottom, that is the balance. So as soon as those two things match and equal, I know that I am good to go. So then I need to endorse the check whenever I deposit a check. So when I do that, I flip the check over and sign the back of the check. So to endorse it, the person, the payee on the front, signs the top part of the back in ink. And there are 3 types of endorsements, and I'm going to show you what those are. So a blank endorsement, I would just sign the check, Donald McLean. And if my name really should be MACLAIN, but they misspelled it on the front, I would first sign with the misspelling, and then underneath it, I would sign my name correctly. Okay? That is a blank endorsement. That's what most people do. There's a special endorsement where I can just pay to the order of someone else. This is a full endorsement. It gives the right to Diane Jones then to cash that check. And then I sign it below showing that's who I wanted it to go to. And then the one you ought to use is a restrictive endorsement. This is the safest. It's saying you can only deposit this check in this account at this bank. And he signs it so that if he loses this out in the parking lot, the only thing someone can do that finds it is put it in that account at that bank. Okay, there are also different types of checking accounts. A joint account is usually 2 or more, and it has survivorship so that if someone dies, the other person can still write checks out of it. There's special accounts that have fees and limit your activity. There's standard accounts that usually have no fees. There are money market accounts that are interest-bearing, but they typically have restrictions on them for minimum balances and things like that, the number of checks you can write. And then share accounts is a checking account for a credit union. So that covers our first section.